Hello all, welcome back to another episode. Today I'm going to discuss about two companies in automobile sector. As you are all aware that the beaten up sector is automobile. So in that I try to select two companies and try to evaluate and find out whether right now it's a good time to enter or not. So let's get in the detail of the video. This is Sundar and you are watching Mindful Finance. Okay, today as I mentioned, two automobile companies. The first one I'm going to discuss is about Maruti Suzuki. So Maruti Suzuki is the powerhouse of Indian automobile. Maruti Suzuki is the undisputed king of India's automobile market, holding a massive 45% market. So they have built a legacy of affordable, reliable cars that millions. But here's the surprising. While most know Maruti for its best-selling hatch, there's a lot more happening under the hood. What if I told you their most exciting growth is not in small cars but in areas you may not. In today's videos, we are taking a closer look Maruti Suzuki, giant that's shaping the Indian automobile market. From affordable hatchback to a premium SUV, Maruti is transforming its lineup, keep up shifting consumer preferences. And stay tuned because I'll reveal how their focus on CNG vehicles, SUVs, and electric mobility is setting them apart in the industry. Let's start with the numbers. Maruti Suzuki controls 45% of India's passenger vehicle market, a dominance that's unmatched in the industry, with over 3,925 outlets in 2,600 towns and cities. So they have built a distribution network, makes them accessible to almost every Indian household. So their financials are equally impressive. Maruti has a debt to equity ratio of 0, meaning they operate without debt, a rare feat in the automobile industry because it's a more capital intensive company. So combine that with return on equity ROE of 15.8%, and you got a company that knows how to deliver value to its shareholders. And here is the kicker: Maruti generates a free cash of 41,788 crore over 10 years, so giving them plenty of resources to invest in future growth areas like EV and hybrid technology. One of Maruti's biggest success stories is its focus on CNG powered vehicles. Today, CNG makes up 33% of the total sales, showing how Maruti is catering to cost-conscious, eco-friendly consumers across India. With fuel prices rising and the government pushing for cleaner energy, Maruti's CNG strategy is perfectly aligned with market demand. But it's not just about affordability anymore. Even premium SUV buyers are embracing CNG as a reliable, high-quality fuel option. With India's CNG infrastructure expanding rapidly, Maruti is positioned to ride this wave for years to come. Maruti is no longer just about hatchback. So their SUVs like Grand Vitara and Fronx are shaking up the market. In fact, the Grand Vitara became the fastest mid-size SUV to reach 2 lakh sales in India. SUVs now contribute 54% of the sales mix from 50% last. So this growth highlights how Maruti is successfully tapping into India's rising demand for premium and feature-rich vehicles. What's even more exciting is that Maruti has begun exporting India-made SUVs to global markets like Japan. So this marks another significant milestone in Maruti's journey towards becoming a global automobile powerhouse. Maruti Suzuki is gearing up for electric revolution. Their first electric SUV is the e-Vitara. E-Vitara is set to debut at the Bharat Mobility Expo in 2025 with a 60 kilowatt battery and advanced safety features. So this EV promises to deliver on performance, range, and affordability. But Maruti is not betting solely on EV. So they are doubling down on hybrid technology, which offers better mileage, lower emissions, and eliminates range anxiety. So states like Haryana and Rajasthan are even offering tax rebates on hybrid cars, making them an attractive option for environmentally conscious buyers. Of course, every success story comes with challenge. So Maruti's small car segment, long its bread and butter, has faced affordability challenges due to rising. Yet, Maruti has managed to stabilize sales, limited edition launches, and innovative marketing strategies. On the financial front, rising sales promotions and seasonal discounts have impacted margins, but Maruti's operating efficiency remains strong, as reflected in their EBITDA growth of 15.1% over 5 years. So despite these challenges, Maruti's robust financial health and strategic focus on high growth areas like SUVs, CNGs, and hybrid position them well for the. So what's next to Maruti Suzuki now? So their long-term vision includes expanding their model lineup to 28 vehicles and launching one EV per year until 2030 and doubling down on rural market expansion with a 10-year sales growth of 12% percentage, and India's auto market projected to grow at 9% annually. So Maruti is well positioned to maintain its dominance. So, and their debt-free operations, strategic focus on sustainable fuels, and innovation in SUVs and hybrid make Maruti a formidable player in India's automotive. So what do you think about Maruti Suzuki's journey? Can they sustain their dominance as the market towards EVs and premium vehicles, or are their challenges too big to ignore? Let me know in the comments below. And if you found this video insightful, make sure to like, subscribe, and hit the bell icon so you don't miss more in-depth analysis of industry of the automotive industry. Then the next one, I'll compare Maruti Suzuki EV strategy to Tata Motors. You don't stay tuned, don't miss it. Like, it will be interesting video. It will give a comparison of between Tata Motors and Maruti Suzuki. So let's see which one wins, and let's see the Tata Motors what it is doing. So Tata Motors is revolutionizing the way we think about vehicles, from dominating India's electric vehicle markets, crafting luxury SUVs under Jaguar Land Rover. Their story seems unstoppable. But here is the surprising part. It's not their cars or luxury brands that are driving their impressive success. What if I told you their biggest achievement lies somewhere most people are not even looking? Deep dive into the Tata Motors, the company redefining mobility across India and the globe. From electric cars to green logic, Tata Motors is transforming everything we know about sustainability in transportation. And stick around, because I'll show you why their commercial vehicle division might be the real star of this. Let's start with the most people know. Tata Motors dominates India's EV market with over 70% market, as Maruti was in CNG, but Tata Motors in EVs. So they're leading the charge with popular models like Tata Nexon EV and the upcoming EV lineup that's set up to launch in 2020. Over 1.5 lakh EVs sold and count. Tata Motors is shaping India's transition sustainable mobility. I love whenever we talk subject about sustainable. I really love, and Tata Motors are almost way ahead of Maruti Suzuki in that area. So their financials are solid too. The company reported a return on equity of 9.4%, showcase how efficiently they are generating profits related to shareholder. Combine this with a debt to equity ratio of 1.0, and you can see how Tata Motors is balancing growth with financial prudence. But here is the kicker. While EVs are grabbing headline, their biggest impact not have passengers car. It's happening where you lease commercial vehicles and logistics. Tata Motors is not just about cars. They are backbone of India's logistics. So their commercial vehicle segment has been quietly making a massive impact. Did you know they have saved over 270 million liters of fuel in the last 10 years through green logistics? That's not just good for business, game changer for the environment. So this segment also generates significant free cash flow, which is 6,730 crore in FY20. Provide the liquidity needed for future innovation. Now let's talk luxury. So Tata Motors owns Jaguar Land Rover, and they are taking the luxury vehicle market to a whole new level with the first all-electric Range Rover launch. JLR is showing how luxury can go hand in hand with sustainability. So despite global challenge, JLR contributed heavily to Tata Motors revenue, helping them see a robust EBITDA margin of 14.3% in the FY. That's proof of strong operational efficiency even in the face of macroeconomic headwinds. Of course, no story is without its challenges, right? So Tata Motors stock has fallen nearly 40% from it, largely due to global supply chain issues and economic uncertainty. But this presents an opportunity for a long-term investment. I'll cover the technical part both of the end of the video. But looking at the price to earning of Tata Motors, 8.26, trading at a valuation that many consider attractive. Combine that with ambitious plan in EVs, luxury and logistics, the company looks well positioned for a strong comeback. So what's next for Tata Motors? The company's plan to demerge its passenger and commercial vehicle business, potentially unlocking more values for investors. And with India's auto market projected to grow 9% annually, Tata Motors is perfectly poised to ride wave. So their focus on green technology, electric vehicles, and global expansion makes Tata Motors not just a leader in the present, but a key player in shaping the future of mobility. So let's get a deep dive into the technical part of both of these companies. And so looking at Maruti Suzuki, you can clearly see it has gone high from the COVID low. It has almost grown of almost 226%. So now it has fallen to almost 21%, and let's see whether it is a right time to enter. If I look at the channel, right, so it has broken the channel. Okay, this was the long-term trend line. It was broken. Okay, if I keep like this, it is at a support. So this is also saying it's at a support. And if I see the horizontal part, there also it shows in support. So it is at a well support. If it falls below this one, you can expect till 10,100 or 10,019, or it may come till 9,007. But I feel it has already bottomed out. It has bottomed out, and it has a probability that if it goes, so it may go further to 14,600 first and 17,000 the next. So there is a good potential of this company to grow to another 61% from here, 60% from. So that is the state of Maruti. Now let's see Tata Motors. So now let's see Tata Motors. Tata Motors had a very good bull run and it fell around 38%. Right? It had a very good bull run, and if you see, it has retraced to 78%, which is a good support level, and it is at a current support level. If it falls further, so it can go till 667, but I feel it is already bottomed out. There is a good chance that may recover from here. Not sure, okay, but it may come down till here like 664 level, but most probably I feel this is a bottom, but not. So compared to, let's see what is the potential for Tata Motors from here. If I see, if it falls further, let's see how far can, if you see, can come down till here 695 or 550. So these are the levels. It may come down to 690 or 690 it may come. Okay, in that case, for now, as per the current scenario, if I feel that this is bottomed out, so it can go till 1300 and 1600 level, which is almost 80% and 130% from the current level. So, but this will take time. This is not going to like one day kind of a thing. It will take time. It is a long-term bet. So don't think on the short term. So make sure to check your investment advisor to whether to enter. It is right time to invest in this company. Or I feel compared to Maruti Suzuki, Tata Motors has a good potential to grow fast because it is already had a in the EV sector. The CNG also is not a great thing, so they have to move to EV. So that will take some time. And another thing is, if you are already owning the Tata Motors, you may get two stock. One is for passenger vehicle, one is commercial vehicle. So you may get a two type of. So in that sector, the passenger vehicle may fall further. I'm not sure. I'm just assuming it may after the split there could be a downward for passenger vehicle side, but it's a long-term bet. It's a good company to check into. So what do you think about Tata Motors now? Are they the ultimate unsung hero of sustainable mobility, or do you think their challenges will outweigh their opportunities? Let me know in the comments below. And if you found this video helpful, make sure to like, subscribe and hit the bell icon so you don't miss more deep dives into the world of business and innovation.